Okay, hello traders. Today is Wednesday, January 25th. Welcome to this live intraday strategy webinar on SB Trade Desk. Good to be with you guys here this morning. Conwal, Lionel, Pete's in the house. We got Saru back, Ziad. Good to be with you guys this morning. So, I hope you caught last night's update in time. We got out just ahead of the Aussie data. We're going to go over the Aussie dollar, Aussie Kiwi, Aussie yen from last night. We'll touch on dollar CAD and sterling CAD, both of which made interesting moves in overnight trade. Pound yen is on the list, euro pound is on the list, and gold and crude. Conwal, let me know if you want me to still take a look at copper. Again, not really a big fan of it. I'll show you we'll jump into it after in the commodity section. Let me just jot it down anyway. And as always, any other questions, trade setups you guys want to review, always feel free. So here's what the US dollar looks like heading into the open of trade. British pound, top performer, 0.48% to the upside in overnight trade. Sterling didn't give us the pullback we were looking earlier in the week. It just continued to rip higher. So we'll track those levels on the sterling crosses. Sterling CAD and sterling yen specifically are what we've been following. Biggest loser on the session, Aussie dollar, down 0.4%, as we highlighted in last night's piece. It was kind of a highlighted risk for an exhaustion trade there in Aussie. I think he got it. I'm flat right here. I'll show you the trade in a moment, but I do think the risk still remains to the downside near term sub 76, essentially. So we'll go over those Aussie levels as well on the back of that CPI print. By the way, that core CPI read for Aussie dollar is the lowest read in history, or on record. I don't want to say in history. The record started, what, 1980 something for Australia. Trimmed mean year over year. Okay, like this is as far back as the data goes. All right, 1983. So this is a record low in core inflation for Australia. What does that mean? It doesn't necessarily mean anything as far as monetary policy is concerned. I doubt that this is going to prompt another cut, but certainly as far as the normalization process is concerned, it's probably going to delay things for quite some time. So this just could be the economic print, the trigger, the event risk you need to trigger some sort of near-term exhaustion in Aussie dollar. And that's what we were looking for last night. Can you add dollar yen to the list, Gary? Sure. Dollar yen. Sir, below 74.88, should we see big correction in Aussie dollar? So let's go over the Aussie dollar in a moment. Before we do, here's the dollar index, guys. Coming into support, I don't really want to beat this trade up. It's the same setup we've been following since earlier in the week. So again, if you go to the intraday charts page, guys, and go to the previous update, here's the DXY levels, okay? We're just riding this lower parallel, no change, okay? And in fact, at this point, the weekly opening range is pretty well firm and set right above that parallel. Resistance still holds at 100.43. It's the same level that we highlighted earlier in the week, and we're just ping-ponging right behind that key resistance. So as I said, I'm still of the mindset that you get some sort of near-term pop higher before you move into 99.50, which is the next downside target. Key support down to 98.99, basically 98.90. Okay, that would be a 1618 extension off the high. But at this point, what you do want to do for the dollar index, guys, is you want to lower that near-term bearish invalidation. We had that at 101 yesterday. You can go ahead and drop that down to 100.72, 100.73. Some nice former swing lows, and that converges right on the median line. So that would be the break of which would shift this a little bit for more dramatic correction before moving lower. As it stands right now, you're still looking at resistance right here. Downside break targets remain unchanged, 99.53, and basically the 99 handle, 98.90. All right, any questions on the dollar index? I'm going to try to move through this one pretty quick, guys, because we have a lot to cover today. So you can see even the makings, some ongoing bullish divergence, price action making a lower low, the oscillator making a higher low on this 4-hour, momentum pretty much holding 40 support right now. Yeah, expect a rebound of sorts from off these levels, I think. Oops. Okay, questions on dollar index. Going once, going twice. That's number one. Number two, Aussie dollar. Here's what I'm looking at with the Aussie. It's a messy setup, and I even noted that I think last night. But look, the basic focus here is that you're heading into structural resistance both on the daily charts and on the intraday charts. You were marking divergence all through the highs in last week, even into this week. So momentum is just continuing to falter as price action is continuing to press into the highs. And then you have a major event risk, of which you're already expecting a pretty weak print, right? The fact of the matter is, not only did you get that weak print on the year-on-year at 1.6, but you even missed on the headline print. We're looking for a build to 1.6, came in at 1.5. Quarter-on-quarter, we were looking for a build of, or a hold at 0.7, softened to 0.5. So the entire inflationary outlook got a pretty big hit. And you're trading into resistance at the highs. It's an automatic look for exhaustion. So initial downside, you want to look obviously for the weekly open. I booked, and it was sort of just luck on the low tick, literally. I had a limit down there. If you guys saw Jamie's tweet, I saw it too, 75.15. I had it right above, I think 75.18. Right below, or right above this low is where I had my limit. So that got taken out, and I'm not short now, regrettably, because I think we just missed another entry, which I'll show you in a moment. But while below this parallel, while below this region at 76, the whole thing is still at risk. Here's what the daily chart looked like yesterday. Okay, this parallel you see here in the dotted line is extending off the low from October. It's the same slope of this. And here's what it looks like on the live chart. Okay, so if you take this same parallel off that low, we just missed that high, and in fact, even just this operative median line formation off the highs, if you bring this into a closed formation, whoops, just the line chart, we never actually cleared it. So the risk was still there. And right now we're looking for the pullback. So near-term support. I have a little bit more of a critical zone here where the 100 and 200-day moving averages converge. That's right around 75 as a near-term support structure. Just below that, you have the 50 line. So I'm still thinking you get some more drawdown on this move. Also, keep in mind that on that high in price, on the closed basis, you did see some divergence in daily momentum. Again, that's giving you a little bit more of an indication that you're seeing some the top side falter. Intraday chart looks like this. Last night, we looked like this on the 4-hour. Again, ongoing divergence into the highs right in front of a data print. Here's what the 120-minute chart looks like. And here's what it looked like now into the print. So the stop for me was right above this high. I initially had it, opened it up yesterday, guys, in the webinar, or right after the webinar on this rally here. All throughout the day in U.S. trade, I had to stop against that U.S. high. Once we were going into the release, I pushed it towards the further high. I didn't really need to do that, but just to be safe, didn't even get that wick. It just slammed lower. So at this point, you came back into the weekly open, tried to press into that high and failed. Again, you're looking for that move down 75, and then that 75 levels in near-term confluence median line there. So here's what it looks like on the, or here's what the trade looked like. So there was the entry shortly after our webinar yesterday. Obviously, I went over this with you yesterday. I also got stopped out on another attempt to short this. Again, it was such a critical region. Sometimes it takes a couple of stabs at calling these turns. So we ate a full allotted stop there on a 25 pip. Here was another entry. This is just an adjustment for leverage as we were getting deeper into the U.S. Open. We were heading to London close, and it still wasn't really giving me much momentum. So I just wanted to lighten the load a little bit. Here was the data print. Okay, a stop against the previous session highs worked pretty well. Remember, you're working with about 20 pips is a quarter of the daily ATR. And again, we kind of just chipped away with it shortly after the release. This was a limit, again, overnight that hit about 3 a.m. here in New York, just ahead, right ahead of those lows that we made earlier last week. So at this point, Mike, what's the point? From here was the entry I was looking for, actually. This rally right here into this former slope. So if you're holding shorts, if you caught that, again, every 20, 25 pips, look to peel a little bit of that off. Initially, you're looking for a move into 75 would just be a basic 236 retracement. And then beyond that, be mindful of that 75, 70, 75, 75 region. Also confluence support. All right. Bearish invalidation, easily you could put that at the weekly high at this point now that we've made a break of the weekly opening range low. And heading into U.S. trade, you know, that's the risk. I was talking about this with Jamie, and based on what price action has done, guys, if this thing does spike into a final Friday high, and we'll talk about that, you know, as we get closer to, or we'll talk about that again tomorrow, I guess, ahead of the U.S. GDP print, which is released on Friday. This is the fourth quarter GDP, and that's really the major event risk that could upset this trade at this point. But with dollar index at support still, I'm still thinking the near-term risk is weighted to the downside here in Aussie. Questions? So below 74.88, should we be seeing a big correction selling? 74.88, yeah, I think if you break that 50 line, you see a bigger correction. I'm not sure what you mean by, I would agree with that, Conwell, yeah. If we break this confluence region here, it's pretty clear. We've gotten formation plays on both this median line formation and the ascending one now. So if we do break below that, yeah, I think you're basically gravitating towards 73.80. And that's where I would want to be looking to expect a little bit more of a firmer support floor for Aussie. There's really nothing left on the docket for Aussie this week, so it's going to be all about that U.S. GDP print. And again, these Trump headlines are going to continue to kind of spook the markets. And next RBA decision is not until February 6th, so still got some time. Okay, so where does that leave us with Aussie yen? Interestingly enough, here's what Aussie yen looked like yesterday. We were looking for the same type of play in Aussie yen. The only thing is with Aussie yen, or Aussie Kiwi was next on the list, but I guess we can do Aussie Kiwi first. What we noted was this. We were coming into this key support zone, 104.37, which we noted on Sunday's report. And as long as we held below the median line, or if the median line held, we'd be looking for these downside targets. I was of the mindset that you might get a little bit larger of a correction here because Kiwi looks like it's ready to spill. It just so happens that, you know, it didn't kind of pan out in that direction. The median line actually did hold, okay, and Aussie Kiwi just went right through the floor. Here's what it looks like. Okay, perfect touch and break right through on the data. Initial target 104, downside 103.80. This is also the monthly and yearly open. So heading into the U.S. trade session at this point, I do not want to be chasing this short. I think you can get a squeeze here at some point. Again, you want to stay bearish now below that same support zone we were talking about last night. Now becomes resistance, 104.37, 104.48. I do think you can see a little bit of a snapback here, but as long as you hold below that, you want to look for the subsequent move lower, sub 103.80. So levels haven't changed at all. I know it's a very choppy trade, Aussie Key as of late, but we're broader directional trade has actually still been pretty clean. Remember, we're working off the premise of this long-term median line again and the rejection at key resistance here. So you can see a perfect touch of the open. See what happens. Could get hung up here for a little bit before you move lower. Aussie Kiwi number 3. Any questions? Going once, going twice. Aussie Yen, the one I was a little bit more excited about to jump into, looks like this. So Aussie Yen had a very similar trade with Aussie dollar in that we were looking for exhaustion, and the bearish invalidation level is 86.83, and I wanted this to hold 86.83. If that broke, there's really nothing to stop this from a run right back into key resistance that we reversed off of in December, and it was a big, big zone. You guys remember we talked about this at length. 87.55 into 87, what was it? To 87.65, this whole zone right here, yearly open, 100% extension, 50% retracement there. It was loaded. So we didn't even stretch that high. In fact, the data was enough to kind of cap it. I guess where I wrote the report was almost right at the highs. Here's what it looked like last night. No, it rallied just a little bit higher and then failed. So still like Aussie Yen. We haven't necessarily cleared the weekly opening range low, so I don't want to get too excited here. Similar to what we're looking at with the previous Aussie Kiwi trade. Could get some back and forth, maybe even a recovery back to the median line. This structure, by the way, hasn't been very fruitful yet. I'm working more aggressively here with the lateral levels necessarily than this near-term slope. We just haven't gotten enough play off any of the levels to use it too aggressively. But lateral levels have been working pretty well. So we're sitting on that 786 retracement, still looking for a break lower for a move on 84, 85, 85 region, a little bit bigger of a critical support zone for Aussie Yen. Any questions on Aussie Yen? Making good time today. It's number 4. Okay, I'm going to continue to stock this Aussie dollar. See if we can't get something here in the U.S. Dollar CAD was up next. Dollar CAD looks like this. And here was a tricky one for me because dollar CAD, and if you felt a little of reluctance in my language yesterday when I was writing this, it was well suited because I just really wasn't too impressed with the break. But you know, if the break below confluence support was legit, and that break was that region that we talked about, just above 31.88. It was the 32 handle yesterday. It's this right here. Basic 100% extension off the high, really short term. Basic 50% retracement off the low. And you had the lower median line parallel, which has been a pivot on both ends at this point. Excuse me one sec. So if this break is legit, right now, basic trendline resistance off the highs, which has already been tagged 3 times, converges there, and this should cap any advance. And we made it right back into initial support, 31.05. We're pushing lower. So downside targets, 30.14, 30.25, still no change. Okay, all we've done from here is fail to even make a run near that near-term resistance. I guess at this point, this is going to be bearish invalidation, and we're dribbling lower. So continue to favor the downside in dollar CAD. If dollar bottoms, because momentum does look like it's losing steam, if the dollar index looks like it's going to make a bigger rally and you're holding shorts from above 132, I think you're all right still. I would be looking for that extended play down to 130.25, 130.15. That being said, for new entries, I'd wait for either a rebound near 132 again if we can get one, or actually a move into 130.15 might be an opportunity for another rebound play on the long side, especially if the momentum signature continues to hold on the near term as such. So we'll see this 618. There is a 618 at 130.83. Let me just copy that here. We'll ditch this at this point. Watch that 130.83 level, just because almost the exact precise swing low that you made back here in December. Might also give us a little bit of a bounce here heading to the U.S. trade session. Watching this DXY with very close intent, guys. Keep popping back to the dollar index just on account of how clean this slope has been near term. And the weekly opening range, very clean. Okay, that is dollar CAD. Any questions on dollar CAD? Lionel says Kiwi dollar. Let me write that down. Kiwi. Gotcha. Okay, Sterling CAD is up next. We talked about this one also yesterday. Very simple setup. And I just wanted to highlight it again here, just because we were coming into that key support zone, this little bit of a pouch right into 64.28, former 50% retracement. We've already gone through it, but it's now being tested as support. Also basic slope support. Extending off the low, take a parallel, nice little confluence region there. So you got to bounce an overnight trade from 64.30 all the way up into 65.45, almost 100 pips. It ended up being a nice little play there. But from this point, I am a little cautious. Ideally, again, in a perfect world, we would see one last leg lower, somewhere near the range of 63. Was talking with Jamie. He's looking a little bit even deeper. Maybe he was looking 62.60, I think. But this region right here for me would be an area of interest for possible reentry in the long side. I think what Jamie's looking at is this slope, guys. If you take this down to here, this slope takes it down a little bit lower. Okay, 63.60s. That's extending off those highs. The actual concerted 50 line is here, though. Nice little pivot high in price. And in fact, if you tack on a retracement off that low, now that we've made that turn, okay, the 50%, or, oops, 38.2% converges right in that region too. That's 62.87. So either way, the idea is here, look for another leg lower. Swing guys, you're looking to use this leg to possibly get a nice long position, inevitably for a more larger, grander scale upswing. Near-term guys, I still think we can get a jab at a short here if we do break the lows for a move down towards that 63 level. Not holding anything yet, but we'll see how this kind of pans out as we get deeper to the UK GDP print tomorrow. Levels remain unchanged, though, from Sunday's update and from last night's update. So we got the support bounce off that region, and we're coming right back into that support. If we do break, look for something a little bit more critical down near that 63 handle, 62.90. Theo says, have we done Aussie dollar? Yeah, it's the first one we did, Theo. He says it bounced at 75.15, bearish invalidation. So real quick, just to review, sorry everyone in the room, just going to take care of Theo real quick. I'm still looking lower, basically above the high you just made. I'm still looking lower against the weekly high is really the bearish invalidation level, if you want to be honest. But the immediate turn, I actually still like it. I still like it to the downside. We'll go over it again towards the end of the session because I'm interested in re-entry too. So I'm looking to see if we can get a bounce. Theo, that was the idea. This is technically a break of the weekly opening range low. I just want to see it maintain below that level, heading into the U.S. trade session. starts to drift back higher, just be wary. We could be making a Friday type of high on GDP before we turn around again. Dollar CAD we did. Sterling CAD we did. That was number 6. Sterling Yen. Another interesting pair. Here's what it looked like the previous session. Earlier, Sterling Yen from last Sunday. Here's Pound Yen. Okay. Still working with this same slope. We extrapolated another one of these parallels off of this low to give us some guidance. Kind of was messy here. You got a perfect touch of it in overnight trade. And here we are making another move higher. So the pound being the strongest performer versus the dollar. In fact, I'd be interested to see what that looks like. Bear with me one sec, guys. And it is. It's also the strongest performer versus the yen as the base currency as well. So on this move to the upside, does this invalidate this bearish near-term formation? You haven't gotten a tag of it as support yet, but still looks like you're vulnerable near-term for a correction. And just as we opened up the week saying look for a pullback into this lower parallel to get long, I still think that's the game plan. You had a couple opportunities to take the long side, but from here, I don't want to necessarily chase it. It might just go without us. If that happens, it happens. But here's what I'm looking at in the broader scale, and this is why I'm scared to try to even attempt to get cute with a short. At the same time, I'm just trying to time a good entry. Remember, guys, even if we have conviction on a directional bias, it's all about your risk management. So while I'm and have been very constructive sterling, there hasn't been any pullback here of magnitude to get you any type of conviction stop, in my humble opinion. So I still like it higher, but support major key level, which would switch things or change things, isn't down until 140 80s or so. The 200-day moving average, the weekly opening range lows, and that's quite away from where we are now. And I sure as hell am not going to put a 200 pip stop. So they call it the Widowmaker for a reason. Plan your entries accordingly. If it is the break of a bull flag type formation, you got plenty of room, 143.87 being just an initial next topside target. You got the yearly open just beyond that. More importantly, a swing low here from back in June of last year converges on a pretty longer term median line here. And that comes in right around 145.40, 145.39. So that's my dilemma with pound yen, and this is what I'm just going to share with you guys right now. Still like it. I'd love to get some sort of a little bit more of a near-term correctional pullback to get in, but till it does, technically you're still constructive above 42. And on this trade, by the way, guys, near-term bullish invalidation is still going to be right down here. Really nice confluence region. Weekly opening range lows, basic 38.2, former slope resistance. That's what would, invalidate the long side of the trade. So wherever you can get a limit that you're comfortable with, or a stop rather that you're comfortable with against that stop or against that low, that's where I'd start to look for entries here back on the long side. Okay, so that is pound yen, number 7. Let's take a quick segue here into euro pound. I want to cover the questions on dollar yen, and someone was asking, I think Theo, on Kiwi, or that was Lionel, and then we'll go over the commodities here for you. So first things first, euro pound, son of a gun, finally made the move. I know you all remember this update from earlier in the week. We cited a bearish invalidation level at 87.40. Okay, right here. We needed to see that break below 85.91 to get it going. inevitably looking for a drop near 85. Now, we took out the initial scalp targets. We still haven't taken out 85. This is the monthly open and the key 618 retracement. So I just wanted to highlight that while this is just the first target that's cited, it's still a pretty big target. So just keep your eye on that 85.30 level at this point. Could offer some more support here on Euro Pound. Here's what it looked like on the 60-minute earlier in the week. And again, there's that 50 line. Perfect hold of resistance on, on the initial rally here. This is where I started to get frustrated. I think I was talking with you guys about this on Monday or Tuesday, was it? Just on this rally here, but it failed perfectly at the weekly open. And then again, the drawdown ended up being a pretty nice move. So Grandpa trade making some progress. Downside break. I'm going to leave this formation here just for now. It's going to highlight the drop of bearish invalidation down to 85.90. Subsequent downside targets are going to remain unchanged. I'd put a soft target here. Oops. I put a soft target here right around 84, 88, just because of that pivot in price. Nice pivot there. Nice pivot there. Nice pivot there. Whoops. There you go. All right, feel free to take a snapshot of this if you need for the updated levels for Euro Pound. And at this point, also, hold on one sec. Let me get rid of these fibs. There you go. Questions on Euro Pound? She's a slow burner, but she finally started to make a move. Okay. Your questions. Dollar yen. By the way, Euro Pound, there's not any divergence into this low, so I wouldn't even necessarily be looking for the bounce, but if you do get that recovery anywhere near towards 85.90, I'd be looking there for initial resistance. Also, there's been talk on, I don't know if it was one of you who tweeted at me or sent me an email, but of a possible head and shoulders formation here. Look, I don't see it. You could technically, right, left shoulder, head, right shoulder break of this slope would technically give you that drop. If you're looking at this, then it's way too early to tell. You don't even have an affirmed neckline yet. So we want to be careful on trying to call these formations before the market actually carves out justification to do so. One move or one thing I would want to just bring to your attention, even if that is the case, okay, even if that is the case, the 200% extension, whoops, takes you right down into these levels, which we'd be highlighting already. And that's 84.40 into the swing low, into a 764 retracement. In fact, if you bring this 764 into a 786, it's right on that same level. Obviously, I eyed this out earlier, guys. It's whoops. So just to show you, but you get the picture. Okay, right on the same level. So you know, whether or not it is a head and shoulders break, remember, the reason that these formation identification becomes important is because it gives you that measured objective. When that measured objective is something otherwise already highlighted by some other technical factor, adds conviction to it, but certainly at the same time, you know, we want to just go with what near-term price is saying. So it could get a bounce here, but looking lower sub 86, 85.90. Euro Pound. Dollar Yen, number 9. Here's what dollar yen looks like. Currently trading at 113.60. I haven't touched this thing for for a while now. I know since the breakdown here, we had a couple of shorts on play. Nothing here. I do think you're risking a little bit more of a bounce from these levels. You know, I'm just not a fan of it. Who was asking about this? Gary. Gary, what were you looking at? I mean, the horizontal levels. Again, this is one of those trades where there's clarity. I think just in the lateral levels. I'm not really liking what we're doing with slope. You know, it's been kind of messy. The opening and the weekly opening range, while well defined on the first couple of days of trade, hasn't even broken or made any challenges. So, listen, it's a weekly opening range below resistance at 114.15. That's pretty much all I got on this. Here's the daily chart. Again, you know, ideally, if you're holding shorts, you're still looking for 111.35, 111.80. This is a huge region in my humble opinion. If you're not, this is actually an area of which I'd be interested for a stronger rebound, possible long exposure. I still think this could still range bound, even see another check of that 115.50 before moving lower. I hate these trades, Gary, that are right mid-range, man, and that's exactly what this thing is. You're not near support, you're not near resistance. And what do you do with those trades? Nothing. If you really felt compelled to trade the yen, yeah, I'd point you to sterling yen, I'd point you to Aussie yen. I just don't see it here in dollar yen. Okay, and with the same respect, I think personally, dollar is a little bit tired. You know, no one's been more bearish than us here on SB, guys. We wanted to see this dollar correction since the start of the year, and lo and behold, it hasn't been the cleanest descent, but it's been panning out pretty well. At this point, you know, you've had a pretty nice decline. You're coming in some support, getting some exhaustion. It is at risk still sub 143, but wouldn't be surprised to at least see a little bit of a recovery here before moving lower. And again, that keeps me wondering, you know, what to do with dollar yen. Might be a similar play. Might still want to go for a gap fill here and then a reversal. I don't know. All I do want to know is I'd love to see this thing into 111.35, 111.80. He says, I know it's the abomination, but just wondering if it's showing signs of giving up shorts. I think you're getting some signs of exhaustion, sure. It's not necessarily that you're getting divergence in momentum, but this still screams exhaustion, guys. These peaks and troughs, the nature of which in RSI, you still want to keep and pay attention. You know, the rounded type of troughs in the momentum signature aren't necessarily going to be quite as decisive as these drops. In fact, these pokes, these really sharp peaks, end up not being as a big a play in price, if that makes any sense. So my point being is this is basically dwindling momentum on both sides. I'm going to defer this to Jamie on the dollar yen. I know he likes the long side, but I want to see a breakthrough 115.50 through the weekly open. That would put me firmly on a long side bias for the near term. Sorry, could you please explain again the rounded tops and RSI and effective Puja? So Puja, just look in price. And here's the thing I always note. So when I'm seeing momentum do a rounded top like this, obviously one thing I want to say, Puja, take it with a grain of salt because all RSI and all oscillators are following price. They're not telling you what's going to happen. They're telling you what has happened. But if you look on daily charts, when you see the rounded top in RSI, they tend to be sort of larger scale corrections on the daily chart as far as where price is concerned. So you see how this rounded top here, the price pullback is much steeper. Whereas if you get a spike high like this, it tends to be just a reactionary type of move. So it tends that the rounder ones tend to end up being more or less bigger signals than these spikes, which indicate kind of near-term emotional just exhaustions. See the spike, see the spike. They're not necessarily bigger turns. Whereas where you see the rounded, more smoother highs, these are more decision-making turns. in price. Does that make sense? And this is just a personal observation. I don't want you guys to get confused or anything. But whenever I see RSI turn, if I want to assess if it's a bigger or more significant turn in price, I want to see a more gradual shift. I don't want to see a peak. Peaks oftentimes can be just kind of exhaustion highs before continuations. I hope I didn't throw everyone off on that. Okay. Moving right along. Kiwi. Looks like this. So this is for Theo, or this is for Lionel. Here's what Kiwi looks like, Lionel. Whoops. So we finally got that spike, this one last final spike. I don't know if it's the final one or not. I do love seeing a turn here, very similar to what we're seeing in Aussie dollar, in that we're getting ongoing divergence in momentum as price action presses a new high, the oscillator making lower highs. By the way, Pooja, about that comments earlier on RSI, those types of observations are on longer scale RSI, not like on an intraday basis. But just an observation I made over the years. Anyway, the key level was 72.95 into 72.91. I think we highlighted this a ways back. We didn't quite get there. Okay, like 7-8 pips off. Either way, you're still getting that divergence, and I still think it's at risk. What does that level represent? Well, whoops, you got to go back in price to the low day close from March 2015. Okay, you have the high day close from, July, which was a big pivot in price. You have basic trendline resistance extending off the highs from September. You have former trendline support extending off the lows from January, and they all converge right here. Now, on a close basis, 72.47 still is preserved, and I have to just highlight that. Something that we always pay attention to. These 618 retracements, longer term, that's off the yearly high from last year, is right here. And while intraday price, both yesterday and today, has tried to spike into this region, on a close basis, we haven't invalidated yet. So I do think that the long side is at risk near term on Kiwi dollar, would sort of match well with a near-term recovery here in the US dollar. And I just don't have the guts to try to press this as much as I was affirmed on Aussie. You know what I mean? I think Aussie had already reached that region. Aussie was already probing structural resistance, where Kiwi, you know, could get a little bit higher. I guess I'm nitpicking at this point, but broadly I'm looking for this to show us a little bit more of an exhaustion trade. Here's what it looks like on the intraday. So on the near term, the structure of the advance also a little messy, little messy, little messy. You know what I mean? So I would love to see this thing turn lower. I guess if we break below the median line, it would be a start. But on a trade like this, it's really the weekly open. Converges on the lower parallel. 71.60 is what we would need to see to validate even a near-term reversal in Kiwi. I'll tell you one thing, Lionel, I don't want to be necessarily long here. Would I necessarily jump to a short? If you can get another push higher into US trade, or if you can get a stop, a decent trigger against the high, it might be worth a shot. But ideally, the topside bias or the immediate advance is definitely at risk as you head into 73 here, 72.90 specifically. Does that make sense? That is Kiwi dollar. Moving right along, a quick look at gold. So here's, hey Pooja, more than welcome. Gold, here's what gold looks like at this point. And it's the same levels that we've been looking for. We've been talking about the pullback in gold, or the expected pullback, ever since we first tagged this 1218 level, or we first made an attempt to tag of it, and that was on the 17th. We got the pullback held at support like a charm. The rally failed yet again. On that rally yesterday, we were talking about the fact that we were marking some divergence. Price action pushing into a new high, again, on a closed basis. Right, higher high. Oscillator makes a lower high. Again, giving you another indication that this was another near-term failure at resistance. So we're getting the push below 1200, 1199 is the exact level. That's the actual swing low that you made back here in May. We're getting a break below that now, so I think this is finally confirming a near-term reversal play here in gold. I'm treating this as a correction. So for near-term guys, scalpers, yes, we are favoring the shorts. Swing traders, longer-term, medium-term, this is going to give us an opportunity to get back on the long side inevitably on a move lower. But I do think your risk to the immediate move is to the downside. Here's what it looks like on the intraday chart. Another reason for that is the break of this formation we've been tracking off the lows from December. Really clean. And although we did see the topside break, you know, the lower parallel, forget the formation, forget the pitch. Just taking the trendline support, you're breaking that now. So 1196, 1190, basically 1196 into 1197 is going to be your weekly, actually, excuse me, that was last week's low and last week's open. And the 236 basic retracement of the advance off the lows. So it's actually pretty clean. All line up right here. Initial support, could see it bounce. You want to stay bearish below that median line. So on a rebound higher, maybe 1204 max. Here's another thing that you might want to take into consideration. Bring this into a 2-hour chart or even an hourly. Something like this could be a foot. It's too early to tell. But, well, yeah, we're ahead of schedule if this is the case. But I was looking at this. Again, confluence with those lows. You have that 236. The median line would converge right there, basically heading into the U.S. Open in just a couple of minutes. So watch that as an initial area of resistance. But why I wanted to add this, guys, the whole point is to highlight. In fact, yeah. Is to highlight now near-term resistance right here. Again, that converges on former trendline support and the 50 line. So former lows, you know what I mean? So if this is how we want to start to assess the beginning of a break. If the break is legit, any type of advance should be capped below this region. And we start to look for resistance triggers here, short triggers in momentum for a move lower. And again, near term or medium term, this is to be treated as a correction. Gold has made a remarkable recovery off of a major support level. The broader bias is constructive, but near term, the immediate risk, I still think remains weighted to the downside. Heading to the U.S. Open, look for possible support at 1196, bearish invalidation still 1206. Downside break, look for that 50 line, but more importantly, you'd be looking for a possible drop towards more meaningful support at 1180. Questions? Thanks. Net went down while you were going over Kiwi. I'm following from Haiti. Oh, no problem. I will listen to the recorded version later. No problem, Lionel. For Kiwi? Yeah, we went over it. Okay, he says his internet went down. No worries, no worries. Look, I'm looking lower. I think you may have another stab at it, but I'm loving a possible turn lower from here, Lionel, okay? Big region of resistance. I'll have this archived enough for you as soon as possible. But feel free to take a snapshot of this chart if you need it. It's the daily. And here's your intraday. Oops. Okay, and that was gold, number 11. Crude. I don't really have too much of an exciting play on crude, but the only thing I wanted to highlight here is something very interesting that happened in crude price action yesterday. And remember when we were talking in the webinar, I said, look, this was a near-term play that we had added. Whoops. I hate when I do that. I said, remember we had added this pitchfork. We said, like, it's way too early to tell, but if this break is legit. But if it is, well, this pullback should find support at former resistance. That's exactly what happened. It was almost to the pip. And if that doesn't give you conviction in what you're doing, then you need to check yourself again. That was a perfect rebound off that. At this point, I don't think we need to stress this fork, but it did give us the rebound. It was a convergence to the 50% retracement. And now it's set a very simple weekly opening range below a key 618 retracement at 53.48. So I just want to look for a break of this range. Conwall and the commodity traders that are here in the room, I wouldn't give this thing any more merit than it deserves. The daily chart's pretty clear that we're in a simple range. It could be a consolidation range. The highs that we made are technically a little bit higher. We have made technically lower highs. So, look, it could be a capitulation. I don't know. All I know is remember the weekly chart. I hearken back to this, and I will do that every time we talk about crude just because of the critical nature of the levels that we're at. Okay? And how important of a resistance zone this is. So on the weekly chart, I think it's pretty clear where you want to be cautious on any type of long side exposure despite what you hear in the headlines or whatever that's going on. And even if the dollar does break down and crude gets a pop, we still have to contend with that major critical area of resistance. Okay? It was almost the exact high that we made in the first week of trade. And that was a doji high almost. So pretty bearish formation, okay? So don't give it more merit than it's worth. I don't want to spend too much time on this, but I just wanted to highlight that for you at this point. So look for a break of the weekly opening range for a tell here on crude prices with the broader risk weight to the downside, at least while below 54. Copper is another one that we've been following for Mr. Conwall here in the room. Again, another one that made another break of that near-term formation that we were following. So at this point, I'm going to go ahead and call this null and void. Don't need that. It looks like we're just pips away from the 1618 extension that we talked about at 273.50. Didn't quite make it up there, but still major resistance, okay? Remember what this is, guys. This is a basic 100% measured move of the range break that we made here. So remember that triangle break that we were in for, I don't know, what is that, from January essentially till October? The measured move of that was 271.50. We haven't gotten a close above that yet. So as far as things goes, this could be, again, another exhaustion trade, another trade that sits here in a range for a while. Don't want to be long, but certainly near-term resistance that you got to respect is that 271. On the near-term chart, I'd bring it up. Even 273, if you get an intraday spike, would still complete a 1618. Definitely long side still at risk here for copper prices. Hey. Would pan out pretty well if you get a dollar rally, pushing this a little lower, right? Let's just see if we can't get that bump in the dollar. Speak of the devil. Okay, so if we do plow through 100 spot 43 today, guys, that's the mark for near-term correction, near-term rebound in the greenback. You'd look for a rally in the index back towards 100 spot 73. That would put further downside pressure on Aussie, further downside pressure on Kiwi, both of which we are looking to favor near-term scalps on the short side. Got to clear this region, though. Got to clear that region. Okay. And that covers everything on my list, guys. Let me know if you have any other questions. I apologize. My voice is a little under the weather. I don't know what's wrong. I think I'm starting to lose it from all this cold here in New York. But quick question from Gary says, quick question about dollar yen. Looks like it's trying to break higher in the 4-hour chart. Here's what dollar yen looks like on the 4-hour. Okay, so when you say break higher, Gary, what is it that you mean? Because when I say break higher, I mean break higher of resistance, not an intraday spike. So I need to see this thing clear 114.14, 114 figure here, keeping in mind that the weekly open is just pips higher at 114.23. That's really what we need to see clear for a move here. Now, if we get really nitty gritty in the price feed, there's a 30-minute. A 100 gives you 114.50. But your question is, would I be right in saying if it breaks 114.30 or so could break out the weekly opening range? Is that what you mean by WO, the weekly opening range? 114, the weekly open. Yeah, I would agree with that. See, Gary, you gotta tame your expectations. So I want to know how are you trying to attack this? From a scalping perspective, if I'm not already long, I got nothing to do here. I need to have a stop against this low at least to try to target this. So right now your risk reward's already off. If you're holding longs, as I get into this, I'd be looking to take some off and bring my stop up once we clear that. But even then, every time we hit a target, just like I did with Aussie, guys, this is a typical trade for me, is always chip it off, chip it off, chip it off. I'm very rarely all in, all out these days. Just because the moves fade so quick that I don't want to get caught on the wrong side of the trade after the trade has already come in my favor. So like I said, this was another entry. Hindsight's 2020, but obviously, as we said earlier in the session, I think we just missed that. But the same thing here. You know, as you come into this region, take a little off. Once you get through the weekly open, I do think you need to be mindful of 114.50. But at that point, I think a larger scale correction is underway for dollar yen. This is only a 2-point, resistance line, so I don't want to, get too crazy stressing that. And you have no polarity on the other side, really. So I don't really want to necessarily stress that slope. Gary, does that make sense? Yes. So we're looking at the same thing. Yeah. I would agree with you on that. He says so if it breaks that level, basically that would be a break of the December downtrend. I wouldn't say from December. It's from the January high. But yeah. Nat gas, if possible. Opposite effect of dollar yen seems to be sterling dollar with short-term divergence. So sterling dollar, we didn't go over the British pound versus the US dollar, which is, again, the strongest performer versus the greenback this week. Look, this was the break of the weekly opening range. I know we talked about this yesterday. The pullback did find support at the monthly opening range. The pullback did find support at the former monthly opening range high. If you got the long in play, don't touch it. Don't touch it. It's got more to go, in my humble opinion. On the immediate approach, yeah, I think you could probably get some further weakness here. Definitely some minor divergence into the highs, but it's there. And again, hey, wait 1 second. That would be a pretty nice move with a near-term dollar pop, right? We keep sneaking that in there. Gary says, yes, cool, many thanks. More than welcome, Gary. Graham says, yep, immediate effect, yep. Okay, so Nat Gas and Sarub wants to look at sterling. So Sarub, these are the levels from the pound. All the pound levels, by the way, are highlighted on the report from the 22nd. So these aren't changed. We're just plowing through one by one. This thing is a beast. That's from the 22nd, Sarub. So just go to the intraday charts and all the pound updates to give you a heads up on that. I will give you another update tonight on a lot of the pound crosses, guys. Again, tomorrow, UK GDP. Here's what the UK GDP numbers are supposed to show. So we're expecting to see a downtick from 0.6 to 0.5%. That's not the big deal. The year-on-year is what you'll be wanting to pay attention to, expecting a downtick there from 2.2 to 2.1. This is fourth quarter GDP for the UK. Then you get a double whammy the next day with US GDP. So sterling's on risk or has event risk on tap over the next 48 hours, both on Thursday and Friday, both of which are pretty decent, pretty significant prints. So something to keep in mind from the event risk calendar there. That being said, levels unchanged on pound. At this point, you want to raise your near-term bullish invalidation level to 123.80. It's right above the weekly open and would necessitate a break back below former slope resistance. Next big target to the upside is 126.70 to 126.80. Big region. 100 off the low, basic 236 of the entire decline off the high from last year. Hey, you're more than welcome. So that's British pound. It was number 12. Actually, it was probably 13 because we did copper. Okay, I think I got to wrap it up here. If there are no other questions, guys, if you do have any other questions, feel free to throw them on the message board. If not, oh, really quick, Nat Gas for you, Conwall. Yeah, I got no play on it right here. It's kind of trying to squeeze water from a rock at this point. Same type of deal. You're in capitulation. You're in type of consolidation. You're sitting mid-range. For me, there's no play here. You want to either get in your 346, 354 region of resistance, or ideally, I still think you possibly get a drop here. And if the dollar does move higher, or you get a near-term recovery, hey, that might be just the move you need to see this give one last move back down into support. That would be 310. At 311, you're looking at the 100-day moving average, a 50% retracement. It's also the swing high they made back here in 2015, back in May. Sort of a big region of support I would like to see hit. Otherwise, you're sitting mid-range. So at best, you see another swing higher or another swing lower. But you want to see a little bit more of a reaction off this support if we can get down near that 311 range. All right, guys, I'll wrap it up here. I will see you all tomorrow morning, 8:30 Eastern, for another intraday strategy webinar. Keep in mind, a quick reminder that Jamie's midweek strategy webinar has been pushed back till tomorrow at 12 o'clock noon here in New York. So we'll be looking forward to that tomorrow afternoon. Till then, best of luck trading, guys. And I'll see you tomorrow morning. Cheers.